And now, Lifestyles Unlimited presents the Real Estate Investor Radio Show. Over the next hour, we unfold your map to financial freedom. You'll learn how to retire through investing in single-family and multifamily real estate. You'll learn how to create cash flow and build wealth so you can have the time and money to live the lifestyle you want.
Welcome to the show. My name is Al Gordon, and as always, I'm just excited today. I'm working on your financial freedom, and I'm all giddy, and I'm excited today because I'm going to talk about a subject that should be, this should be a subject that should have you on the edge of your chair, making you wanting to just dive right into it. You ready for the subject? Credit. The subject today is credit. That's what we're going to talk about today. We're going to talk about credit. And I know half of you are just going, really, dude? That's what you've got? That's all you've got is you're going to talk about credit? Well, yes, that kind of is all I've got. But at the end of the day, it's all you've got too. It really is. What am I getting at? Okay, you've tuned into this radio show either by accident or you came here purposely. There's no other way to get here. You either find me accidentally or you tune in purposely. And regardless of how you got here, I'm glad you got here because what we're going to talk about is we're going to talk about your credit, and we're going to talk about how your credit is affected by everything in the world. And we're going to talk about real estate investing and how credit is important for real estate investing. Now, I've got to caveat something right up front. I need to tell you this right up front because this is very important. Your credit score will make or break you if you decide to invest in the single-family space. It's as simple as that. One of the things that single-family lenders want to do, it's part of their guidelines, is they will pull your credit. They want to see what your credit worthiness is. They want to see if you have good credit. They want to see if you're a good risk. They basically, what they're doing is they're checking you out. They are checking you out, and they are using your credit report as a tool to determine whether or not you're somebody they want to do business with. Did you know that? Whether it's a credit card company, whether it's a home mortgage company, whether it's any other entity that relies on credit reporting ratings, all of those entities are checking you out. Did you know that? You're getting checked out, bro. Yeah, it's been a long time since you've been checked out, huh? Oh, it's kind of cool. Or is it cool? Oh, maybe you've got skeletons in there. Maybe you've got problems. Maybe when you check your credit report, you don't get a big number like I get. Now, when I check my credit report, all right, it's going to sound like I'm bragging. I'm not bragging. I'm trying to not brag, but here I'm going to say it right now. My credit report is over 800. I'm not going to give you the actual score, but it is over 800. So that means creditors out there are willing to do business with me. Creditors out there are willing to loan me money. So what about you? Where do you sit? Do you even know what your credit report is? Do you have an idea that you even have a credit report? Okay, let's start there. Do you even understand that there are 3 major credit reporting bureaus out there that are tracking just about every major purchase you make? Did you know that? You had no idea, did you? Oh, it's big business. It is huge business, and they are in business of tracking you, tracking your credit, tracking your purchasing ability, tracking everything about you. You thought it was just Google doing that to you too, right? You thought it was only Google and all those online entities out there that were tracking everything that you do. Well, the credit reporting agencies, they're kind of in the same boat. They track everything you do. So the first thing you need to do, if you have no idea what your credit report is, just go get a credit report. Yeah, get one. Get a free copy of your credit report from the major credit bureaus. Did you know that you, as an American taxpayer, that has nothing to do with it, but you as somebody that buys stuff in America, you as somebody that has a credit rating in America are entitled to know what your free credit report looks like? Yeah, so when's the last time you've gotten one of those? When you go to lunch today, when you take some time off for you, because I know you're busy trading time for money, I get that. I get that. And I know that's important to you, and it's important to me that it's important to you. So I'm on your team. But here's what I want you to do at lunch. And if you can't do it at lunch, here's what I want you to do when you get home tonight. I want you to go and get a free credit report from the 3 major credit bureaus. And I want you to review that credit report. I want you to look for errors. Yeah, you heard me correctly. I want you to look for errors. Very important, look for fraudulent accounts, because there's a whole lot of fraud going on in America today, and you could be affected by it, and you don't even know it. You have no idea. And when you find inaccuracies and you find fraudulent accounts, the next thing you're going to do is dispute all of those errors that you find with the credit bureau. Back in 2017, when I became a member of Lifestyles Unlimited, I was educated that if I was going to buy assets in the single-family space, that I needed to have a credit score of at least 620. You heard me correctly, a credit score of at least 620. And that was to buy between my first 1 and 4 finance properties. Yeah, so a credit score of 620 would get it done for me. Then if I wanted to buy my 5th property, my 5th through my 10th property, I would need to have my credit score go up. I would need a minimum credit score of 720. It's a 100-point increase in my credit score. Now, since that time, believe it or not, guidelines for mortgages have changed. They have. And here, I'm looking at the guidelines for multifamily property loans right now. Here, I'm going to read from you from an excerpt from the mortgage reports. And here's what they say. Your credit score will need to be in the high 600s or the low 700s. In a 7-year period of time, the mortgage guidelines have changed. They've become a little bit more difficult to work with. And as a result, you're going to have a credit score probably at least 680. 680 in order to get a residential property loan for an investment property. 680. That is a 60-point jump over 7 years. If you don't sit in the high 600s or higher, you've got some work to do. It's as simple as that. Okay, so what about those of you that have looked at your credit report and you said, "Oh, wow, there's a problem here. I've got to make some corrections here. I've got to contact the credit bureau and I've got to correct an inaccuracy in my credit report." Okay, get it done. Get it done. How long does it take for an inaccuracy in your credit report to be remedied? Short answer is, I don't know. I don't know because I don't work for the credit bureaus. I know it can get done in a fairly quick period of time because I have personally fought inaccuracies in my own credit report, and I've gotten it done in a fairly quick time. What does a quick time mean to me? To me, it means 30 days or less. I got it done in 30 days or less. That to me is a quick time. If it takes more than 30 days, it's taken a long time. Yeah. So 30 days or less, get it done, and you are good to go. Now, what can you be doing right now to benefit you and your credit score that has nothing to do with inaccuracies or fraudulent accounts? Pay your bills on time. Yeah, you heard me correctly. Pay your bills on time. On or before the due date, because a late payment can severely impact your credit score. Yeah, even 1 day late can put a massive ding on your credit report, and it can drop your score many points. Set up reminders. Or set up automatic payments. When it comes to my personal finances, I manage and control my personal finances on a spreadsheet. And I use that spreadsheet to operate my household. And then I use calendar reminders to remind me that I've got a payment coming due. And I don't want to miss that payment. So I make sure that I get that payment made in a timely manner. The reason I do that is because my payment history is pretty incredible. Check out, now this is coming from my credit report. Okay, it says you made 521 out of 521 payments on time, resulting in a 100% on-time payment rate. So what does that translate to on my credit report? That translates into a score of excellent on my credit report. Excellent on my credit report. And that excellent on my credit report translates into me getting into the 800s with my credit score. Does that make sense? Okay. What else can you do? What else can you do to improve your credit score? Well, one of the things you can do is you can reduce your credit card balances. If you keep money on credit cards, in other words, you go out and you buy stuff and you put it on credit cards and you pay over time, man, you're missing the mark. Not only are you paying a lot in interest, but you're keeping balances on credit cards, and you know what that's doing to your credit score? It's affecting your credit score. It is negatively affecting that credit score because your credit score looks at the amount of credit that you actually have and your credit usage. It looks at those two factors. So what you want to do is you want to keep your credit card balances below at least 30% of your credit limit. Even better, keep it below 10% of your credit limit. And always pay your balances off every month. Be a deadbeat to the credit card companies. It's okay. When we come back from the break, we're going to talk about some other ways you can improve your credit score. Stick around.
Lifestyles Unlimited's Real Estate Investor Radio Show returns in a moment. Got questions? Go to lifestylesunlimited.com.
Del Walmsley interviews Chad and Lisa.
This property, for you to have done what you've done, won the award, changed it around, done all the re-up, has got to be worth a lot more.
We purchased it for $8.275, and it's worth $19 million now. So
wait, whoa. That is incredible. I can see why you won an award, and that's great.
Lifestyles Unlimited. Over 33 years teaching the real estate retirement roadmap. Text the word radio to 88007 for a $297 membership. Save $443 off the regular price. Text radio to 88007.
Creating the lifestyle you've always wanted. You're hearing Lifestyles Unlimited's Real Estate Investor Radio Show.
Welcome back to the second half of the Lifestyles Unlimited Real Estate Investor Radio Show. My name is Al Gordon, and as always, I'm working on your financial freedom. And on today's show, we're doing so by talking about your credit. We're talking about your credit report. We're talking about your credit rating. We're talking about all of those things that make you squirm. Yeah, your credit rating. But your credit rating shouldn't make you squirm because you should know exactly what your credit rating is. And here's why you need to know what your credit rating is. If you're going to be a real estate investor in the single family space, you need to have good credit. Now, I'm going to share with you something that I didn't share with you at the beginning of the show, and this is a bonus to all of you that listen to the entire show. Are you ready for this? Nobody cares about your credit, for the most part, if you're a passive investor in a Lifestyles Unlimited deal. What did I just say? What exactly did I just say? Okay, there are different ways to invest in real estate. There clearly are. There's a myriad of ways to invest. That you can invest in single-family assets. You can invest in multifamily assets. You can invest in other forms of commercial real estate. Now, at Lifestyles Unlimited, we don't teach the other forms of commercial real estate because we've determined that the most optimal form of real estate investment is in the residential space. In other words, the place where people live, either single-family assets or multifamily assets. It's part of the reason we don't get involved with the other forms of commercial real estate. They tend to be a little bit riskier, and we don't teach those things at Lifestyles Unlimited. So as a result of that, we're not going to teach you about those things on the radio either. So here's the piece of information I wanted to share with you. When you are investing in the multifamily space, when you become a Lifestyles Unlimited member, and you invest the way that I invest. See, let me explain to you how I do the majority of my investing. I invest my hard-earned dollars with my fellow Lifestyles Unlimited members. Yeah, I'm invested in different multifamily apartment communities across the United States of America, and that's how I do my investing. Guess how many lead investors asked me for my credit report when I was doing that kind of investing? None. Yeah, it was none. Nobody cared what my credit report looked like. All they cared about was whether or not I had the financial well-being in order to invest in the investment. It's as simple as that. Let me get back on to this discussion of your credit report. Here's why, regardless of how you decide to invest in real estate, whether you decide to be a single-family investor or a multifamily investor, regardless of whether or not your credit needs to be pulled, you need to be worried about your credit because there are other things in your life that are affected by your credit report. Did you know that? Did you know that insurance will look at your credit worthiness when they determine how much they want to charge you for insurance? You didn't know that, did you? There are insurers out there that will actually ask permission to pull your credit report. And of course, you'll sign that piece of paper because, we all sign those pieces of paper that get put in front of us every time we're trying to buy something, right? And at the end of the day, your credit rating could have an impact on your cost for your insurance. What about a new vehicle? Do you from time to time need to get a new vehicle? Whether the vehicle is new or used is immaterial. You may be one of those people that goes out and buys a vehicle and you don't pay cash for it. You pay credit. In other words, you take out credit for that vehicle. You want to get as low of an interest rate as possible, right? Okay. Your credit report has an impact on that number. It totally does. All right. This is why your credit report and your credit rating is so darn important. Now, let me share with you a way that you can actually increase your credit score without paying down any of your balances on your cards. You interested in hearing about that? Okay. What I want you to do is I want you to go to your credit card issuers and ask them for a credit limit increase. Even if it's only $1,000, what it will do is it will increase the amount of available credit you have, which will have an impact on the ratio of the amount of money that you owe, which is a benefit to you when they determine your credit score. I know, man. It sounds like I'm talking in circles, right? Well, I kind of am because I'm talking about credit card stuff and I'm talking about credit limits and I'm talking about your credit score. This is kind of like a circular argument. It really is because some of you understand it. Some of you don't understand it, but I want all of you to understand it because at the end of the day, your credit score has an impact on your wherewithal when it comes to just about everything financial. Unless you're paying cash for stuff. All right. What's another thing you can do to improve your credit score without doing something that would mess up your credit score? Well, don't open too many new accounts. You heard me correctly. Don't open too many new accounts. Limit your new credit applications to necessary credit applications. Only apply for new credit when absolutely necessary. So like when you're at the box stores and stuff like that, and you're looking to get some stuff for your house and they make that little offer to you, or they go, well, you could save 10% off your purchase today if you apply for this credit card. And you're thinking, wow, I could take an extra 10% off an already large purchase. All I have to do is apply for a credit card. Well, the problem is you're applying for new credit, and that new credit application can result in a hard inquiry on your credit report, which can temporarily lower your score. That's why you don't want to do that. That's exactly why you don't want to do it. The other thing that you want to pay attention to is you want to maintain your account age. What does that mean, maintain your account age? Well, the length of your credit history matters. So keeping older accounts open can benefit your score. As a matter of fact, I'm looking at my credit report right now, and I'm looking at my oldest credit line 38 years ago, I opened up an account with Discover Bank. You probably heard of the Discover card. Okay, one of the first credit cards that I took out was Discover Bank 38 years ago. That is the oldest account that I have on my credit report. I have never closed that account. All right, speaking about old accounts, should you keep them open or should you close them? Well, I think what you need to do is you need to keep them open because the age of your credit accounts contributes to your credit score. You didn't know that, did you? Keep those old accounts open even if you don't use them frequently. I want you to monitor your credit regularly. But what I want you to do is I want you to consider using a credit monitoring service to keep track of changes to your credit report and your credit score. Now, get this. Many banks and financial services entities offer free credit score monitoring. Some of you have major credit problems. You have big problems. You have created big problems for yourself, and you do not know how to get out of that big problem that you've created for yourself. So what do? What should you do? You should seek professional help. There is professional help out there. Yes, credit counseling. It exists. It's legit. As a matter of fact, we have credit counselors as a part of our Lifestyles Unlimited vendor marketplace, and they are designed to help you if you're struggling to manage your debt, and they will assist you with seeking help from a credit counseling service. That's what they will do. They can offer advice and create a plan to improve your financial health. And I will tell you this, if you're struggling with credit card debt, if your credit cards are all maxed out, if you're concerned that you may not be able to make your minimum credit card payments this month, you need professional help. Now, if you're in that situation, this is the one time I'm going to suggest do not become a member of Lifestyles Unlimited. I'm serious about that because your financial health is in dire trouble right now, and it needs to be dealt with. Do not become a member of Lifestyles Unlimited in an effort to correct your credit reporting. There are plenty of entities out there outside of the Lifestyles Unlimited community that are available to assist you with professional help. Seek out that professional help if you need it. It's really as simple as that. Now, what else can you do to improve your credit rating? Have you ever considered negotiating with your creditors? Have you ever considered doing it? And this is for those of you out there that are having trouble making payments. Contact your creditors and ask to negotiate more favorable terms or maybe even a payment plan. And by the way, this is something that those professional people will encourage you to do if you don't do it yourself. Yeah, they will encourage you to get that done. So what does that mean? Well, maybe you call up that credit card company that you're paying 22% interest to, and you just say, look, I'm about ready to not be able to make my payments anymore, and it's all because that interest rate is so high. Can you do me a favor? Can you lower that interest rate? Or can you put me on a payment plan because I can't even afford the minimum payment? You want to know what that creditor is probably going to do? They're probably going to do that for you. And here's why. They don't want you going into default. If you go into default, it becomes a bigger problem for them. And they'd rather remedy the problem while you know it's a problem than have it become a problem for them, which would ultimately become a problem for you. Does that make sense? I know that makes sense to you. All right. Last little piece of advice that I want to share with you with regards to your credit cards. I want you to avoid closing unused credit cards. Yeah, closing unused credit cards can increase your credit utilization ratio and lower your average account age, both of which can negatively impact your credit score. That's why you don't close those accounts. When I was a very young man, way back in the day when I took out that Discover card, I remember I took out a couple of other cards along with it. I remember I took out a gasoline card for one of the major gasoline providers in the United States of America, and I took out another credit card. I don't remember what that was. And here's the thing about those other two credit cards that I took out when I took out the Discover card. I remember somewhere along the line closing those credit cards down because I didn't use them anymore. Now, unbeknownst to me, way back in the Flintstone days, that actually had a negative effect on my credit report. But I didn't know it at the time because, well, my credit was still pretty good way back in the day because I was always taught that credit should be used very cautiously. And there's two types of credit out there. There's good credit and there's bad credit. What's good credit? Good credit is credit that is used to secure assets. Yeah, things like home mortgages on real estate. Yeah, that is real good credit to have. What's bad credit to have? Well, I'm going to say it. Credit card debt. Those of you out there that have credit cards that you're not paying off every month, you are in a world of bad credit. You need to improve upon your current situation. You need to get control of the situation, and you need to get yourself to a point where you're not living off the credit cards anymore. Now, for some of you, and I'm going to use a naughty word on the radio, but here it comes. Some of you may have to consider bankruptcy in order to get this done. Some of you may be in a situation where it is so desperate that that's the only remedy for you. But I'm here to tell you, for the vast majority of you out there, bankruptcy is the last-ditch solution. That's the last thing that you want to do. There are plenty of other things that you can do along the way to improve your credit score, to improve your credit rating, to make people want to do business with you that have nothing to do with bankruptcy. Does that make sense? Okay, so if you have to do bankruptcy, I understand, but just understand that bankruptcy comes with a very, very big problem, and that is a 7-year sting on your credit history, and it will negatively affect your credit history. So if you can avoid bankruptcy at all costs. All right, I've been all over the map today. I really have been all over the map. And part of the reason I've been all over the map today is because credit is very important. But let me restate where credit is important to you. Credit is important to you when you're buying single-family assets. Credit is important to you when you're buying personal things for your household. Credit is important to you when you are doing certain things in life, and credit is a way for people to measure whether or not you have credit worthiness. Now, you want credit worthiness. So you want to do all the things that I've talked about on today's show. You want to do all of these things like having good credit, because good credit is only a benefit to you as a real estate investor. If you want to do what I'm doing, you want to do what the 50,000 members of Lifestyles Unlimited are doing, go to lifestylesunlimited.com. When you get there, sign up for a free workshop. And I'll tell you what, once you sign up for that free workshop, that's everything that you need to have at your fingertips to get you going.
The information and opinions you hear on the Lifestyles Unlimited Real Estate Investor Radio Show are those of the hosts, guests, and callers. The Lifestyles Unlimited Real Estate Investor Radio Show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented constitutes an endorsement, recommendation, offer, or solicitation to buy or sell any product or security.